Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. I got Greg and Senior Pete Peterson on to talk about what's happening in the marketplace. Before that, this Moving Iron Podcast is brought to you by John Deere. Greg, how you doing today?
Doing well, Casey. How about you?
Doing good, man. Doing real good. You playing a little golf this week, huh? You got a tournament up there.
Yeah, I'm an old dinosaur. We have our state senior amateur tournament, so yeah, giving it a whirl. Didn't play very well the first round. Hopefully today will be better, but yeah, it's a thing with golf. You know, every day is a new day, so hopefully it'll be good today.
It's amazing how you can go out and play lights out one day and come back the next, and it's like you never played around the golf.
Yeah, from a data guy like me, golf is frustrating / fascinating because yeah, you're right. One day or one stretch of holes, you're like, man, I got this, and then holy cow, turn around and then the next 3-4 holes or the next day is like, wow, that was bad.
Yeah,
but it's I've been playing since I was 5 years old, so it's right or wrong, it's kind of in my blood at this point. I'm still having fun with it. So
yeah, golf is. I love playing with my son plays golf, so I love playing golf with him, and he takes it really serious, and I don't take it very serious. So it's he tries to teach me how to go out and what I'm doing wrong, and I'm like, let's just hit your ball. Okay, let's go.
You don't take advice from your son easily, Casey?
I will take your son, but I'm like, you understand, I'm not here to like.
Yeah.
Let's keep pushing down the line.
Yeah, well, as long as you have fun, that's the bottom line. Even if you have a bad day on the course, it's can be a good getaway. So,
yep, for sure. Well, we had a couple big sales this week. You saw one over at DPA, one over at Merit Auction. Had some late model stuff sell. Greg, what did you think of those sales? Those went through the line there yesterday?
Yeah, I thought on par with what we've been seeing. Again, as we're recording this, these sales were yesterday. So Merit had a sale. I think it was 5 dealers from quite a geographic footprint. I know they had Shoppas down in Texas. They had Greenway down in Arkansas. They had AgPro down from Ohio in the southeast, Ag Alliance. So yeah, they had a lot of late model equipment. A couple highlights. There was a combine that I was really watching on that one, Casey. It was a 2023 model S780, 196 separator hours on it. I think it was from Greenway equipment down out of Arkansas. So for $410,000, just from a raw data standpoint, that's I think tied for the 6th highest this year on a S780. And if you pull back on S780s, average auction price now so far here in 2025 is at just under $272,000. And for perspective, last year it was about 275 and a half. So there's that footing that we kind of talked about that started to settle in back February and March of 25. But, you know, you go back a couple of years and the average was up 355. So obviously falling a lot. They had an X9 1100 on the auction yesterday. That had, how many hours did that have? That had 535 SEP hours, went for 369. And if it was a 22 model.
Say had 500. How many hours on it?
535 SEP.
535 separator, and you said
22 model.
18 model.
At 369. Now, just by the numbers, I mean that's the third lowest auction price I've seen on an X9 1100. But it was a 22 model. What's that? Was
it Rice?
That one, I believe. I don't know if that did come out of Arkansas. I think it was down that direction. So, yeah, I'm looking across. They had quite a few late model tractors, and they all were right on par, you know. And of course, Merit really markets their sales very well.
Good job.
Let's see the tractor highlight. They had a 23 model 8R410, 620 hours, went 335. Average this year is about 342, which is just down a little bit from last year's average of 349. So that was yesterday by our friends at Merit.
Yeah, they had it's you see stuff like that come out of the deep south like that, especially the Arkansas area, East Texas, those areas like that. Comments that run out of there. I like the Lyrica Rice Combine, but not always. Not always highlighted,
Yeah.
but there's always. I will tell you, as a guy that's been around for a long time, selling rice combine in non-rice countries is tough. But if you're looking for something that's got extended wear packages on it that are built to last, those rice combines are the ones that have the componentry that are
Mm.
built to last. Because rice is one of the most corrosive and hard crops to get just because of the conditions that you're in, and
Yeah.
it's amazing to watch them go. But that is that one that you had, that 780 for 410, sounded like it was a pretty good deal. I mean, that was for what it was and where it was at. It sounded like that was a pretty good number.
Yeah. Get over 400,000. I thought so.
Yeah.
Again, as I looked back on S780s this year, um, and I think I think the combines have softened a little bit from back in January through March. Definitely, they've softened a little bit. I looked S780s. I think the highest I've seen this year. I'm trying to find it. We had one at 499,000 back. I think it was January 25th. Yeah, it was Nehawka, Nebraska, and it was a 24 model, 165 SEP hours. Steffes Group sold it. That was March 13th at 499. So here's one that had 196 SEP hours, also 24 model. Just did 410 yesterday. So again, you're talking about February and March versus here we are in September. And actually, that trend I've seen that pattern over my 35 years, Casey. It's usually, and if you go outside of a couple of years ago when the market was so crazy hot, everything was selling high. It always seemed to me August, September, early October was a good time to buy.
Yeah.
Even a combine, you'd think it would be a bad time to buy right before harvest, but no, that's not what the hard cash auction data shows you.
Sure. And speaking of which, we're in that time frame again right now. Right, so we're mid-September right now, creeping into that last quarter of the year, October, November, December time frame. A lot of transactions take place during that time frame, just like you said. And I always like to do one show a year where we kind of sit down and talk about, hey, if you're in the market to buy something, this is probably some things you should be paying attention to. And this year is unlike other down cycles. The interest thing is the one thing I'm paying the closest attention to right now. There's still a lot of folks out there that need to upgrade a machine, but the note that they have on that machine's at anywhere between, it could be 1.9% all the way up to 3% or something like that, and they're trading that off for 6.5% and probably 2.5 times as much amount financed as it was on the last thing. So,
right.
So one thing I want to make sure that when I'm looking at it right now, if I'm out looking at something right now, I'm paying close attention to the interest, the equity that I have in the machine that I'm trading in, right? And what the interest rate is going to be, and then how does that going to affect my equity over the course of the note? And when you're going from 2.5 to 3% interest, and you're doubling that interest rate, that's gonna, you're gonna really start carving into that overall equity in that machine. So I've always encouraged folks when they're in a situation like this, when we're coming through COVID and all those kind of things, instead of looking at putting 20% down, maybe look, if you can, put 30 or 35% down. That way you lock in that equity that you've got. Now I'm just telling you, all I'm telling you right now is that what I just said was you're gonna burn a 10% of your money down roughly because of where interest rates are. But I think that's an important thing to pay close attention to, especially if you are a person that is setting up your equipment to have a high equity position, or if you're setting up your equipment not to have a high equity position. Like, those are the two conversations you got to have. Like, what's your idea? So I guess, Greg, when you're looking at this, what are some of the stuff that you pay attention to when folks ask you, hey, what should I be looking at when I go to buy my next machine?
Yeah, well, interest rate, yeah, obviously huge factor there, Casey. The rate you were paying versus what you're going to pay. My deal, again, is seasonally looking at the data through the ups and downs of the egg cycles, and just try to get it down to the model level. So, I mean, obviously, whatever you're looking at, if it's a 8250 combine, what have they been doing? And then you look for movement, I think. And again, I think earlier this year, across the board with late model, large equipment in particular, we started to see a flatlining. Now, that said, they dropped like a rock last year in 24. Uh, my experience with people looking to buy is that when things are falling like that, there's always the old, well, is it going to fall another 5%? And maybe therefore should I wait? So I look for little tails that the data trail tells you. And again, like we were talking about those numbers yesterday, kind of holding. So that to me is the thing. And again, I think, looking at things also that aren't as visible at the farmer level when you're analyzing buy sell decisions, that would be the supply level. Farmers understand supply and demand, so and they have a sense driving by the dealer lot. Okay, that supply looks up on the used lot or looks down, and how that can affect things. So those are some of the things that I chew on. But again, our auction data for 35 years has tended to show that August, September, October tend to be a pretty good time if you're able to be aggressive to be a buyer, whatever you're looking for.
And it's
Uh, your dealer probably is going to be pretty receptive. Now, if you're trading something in, of course, that's you're probably not going to get what you hoped for out of that. But
and it's cool.
yeah, I guess I just hope our data, Casey, can fill in some of the blanks.
Yeah.
As folks analyze, you're looking at a planter, a combine tractor. What did this stuff sell for yesterday? And how does that compare to mine? It gives you an idea. You don't have to like it, but it lets you know. It strips the emotion out of it, so you can just deal with hard facts.
Yep, for sure. Another thing too, I'll throw out there, I think is another good buying period is that first quarter of the year. If you don't need the tax write off or whatever it is coming out of at the end of the year for that piece of equipment, if you're going to defer some capital over to some earnings over into that first quarter, that first quarter of the year also is a good time to buy. If you're kind of a down cycle in the end of the year, that first quarter is not going to be that much better than it was beforehand. It typically, if you're at the bottom, you start seeing a peak up towards the end of the quarter, fourth quarter going into the fourth quarter or first quarter, you're going to see things kind of trickle on, and it's not usually till the second or third quarter when you really start feeling things move. You and I both talked about on how we're seeing the bottom here get a little more solid every day, and I think we're there. I'm not anticipating seeing a big dip in values as we go things forward. Talked a little bit about combines and what that looks like, but I also think that was the amount of some combines have come back onto the marketplace just because of what's gotten delivered, and we're going to start. But I really think we're going to start seeing those numbers fall off, which will obviously push things forward a little bit, supply and demand stuff. But end of the day, between now and probably the first quarter, I think is going to be your best opportunity to buy a machine at a good value. Yeah, I don't think you're going to be able to buy it any cheaper than you're going to be able to buy it right now going down the road.
Well, yeah, again, that footing that's to me an action point when you start. Okay, it's firming up. Now, what do I need? And then you be aware of the supply thing. The one thing I would say an X factor right now, we've touched on it. We all dance around it. Whatever we're reporting on an ag these days, but the current environment, there's more. How to say? There's just more realness becoming in the reporting that's coming out from ag itself on what this is right now and how tough it is.
Yep.
And kind of the reality that, probably that China has sailed for, and what does that mean? And so we've talked about, like on my end, I've definitely been feeling it. There's more auctions. There's just more auctions. And there's going to be more through the end of the year. Now, how does that affect things? We'll have to see. One data point I look at, and we've talked about it, but we know that particularly November, December has been, I've said it for probably 15 years. If I were having my sale, I'd have it November, December, because that was always to capture the buying heat of the Section 179. Now, last year was only the second time in 25 years I've seen Q4 used values drop. First time was at 50. So Will that happen again? I don't know. So far, like those sales, that's why I look at what happened yesterday. Are we doing this? Are we holding? Is it going like this? So, right now it appears to be holding, but again, there's building realness and, negativity that's real. It's not just people being negative. I mean, there's a lot of pressure out there.
Oh, it's
So we'll have to see how that affects things.
yeah, for sure.
But the good thing is that when I look at the supply side on used, and we've talked about it a lot, but when I look back and compare to a year ago, and our dealer friends, they still like those sales yesterday, guys. They didn't want to take that stuff to auction, but they did. But the supply situation is much better than it was a year ago. So that also works towards that footing that we're talking about, that we've been seeing here in 25.
Yep, for sure. Yeah, and I think the price that we're seeing on the farm side with the number of auctions that we're seeing and the amount of them that are farm sales comparatively to consignment or dealership sales, those kind of things, that number's creeping up, and so we're going to start seeing that move through. So again, a lot of different things that are in this soup bowl than there have been in the past, just as far as ingredients go. It's just a little bit different than what's the time before. I had a conversation with just catching up with him and how he's seen how he's been. Alan Hoskins, who's a baker, down in working ag lender, and I was asking some questions about that, and he said, it's just getting tougher out there to just watch people's the equity that they have is disintegrating and those kind of things. So it's just getting tougher and tougher, and that's going to have, again, that'll have an effect on pricing, because used equipment it's a commodity, and it's one of those things that there's a set price that if you're worth the deal and things come through, but the market's a sliding scale, and it's all based upon what happens. And we're seeing some movement in the commodity prices right now, and basis is starting to kind of slow up a little bit too, which is good. But at the end of the day, it's still available capital for available supply, and what's that look like, and then obviously demand, and that's it.
Yeah, to me, this, and you can look at the AEM numbers, sales of new equipment, what they've done year over year versus 2 years ago. And, that is what it is. Now when the belt, and things get tightened and tighten more and tighten further for folks continuing, I mean, that to me, it's so interesting, 3.5 decades tracking these ups and downs, because when times are tough, then that almost puts more, it does put more premium on good used.
Yeah.
If you're not buying new and you got to farm your acres. So, that's why it's so interesting. Like yesterday, to see that 1-year-old S780 with 196 step hours on it. What's the number?
Yep.
Is it 400? Is it 420? Came in at 410. Again, these are little markers along the way to tell us kind of how farmers are thinking and feeling, basically.
For sure. All right, Greg, probably a good place to stop. Folks want you to come talk at their event or just ask you a question. Best way to do that is just go to the contact page there on machinerypete.com, and they can find you there.
Yep, find me there, or Twitter, also Ag Twitter. Send me a message there. That one gets right through to me immediately, and I try to get back to people quick as I can. So, yeah, just reach out, and appreciate people following along.
Are you at Machinery Pete on Twitter, or are you at Greg Peterson?
It's Machinery Pete.
Is it?
Just,
okay.
At Machinery Pete. Yep. If you're on Instagram, I think it's there. It's I think that's the real Machinery Pete. And Instagram's fine, but honestly, Twitter is more responsive, I think.
Yeah.
And then Facebook's got some good and bad points or whatever, but or you can just shoot me an email, just greg@machinerypete.com. Let me know any questions you have, folks.
Right on. And you can reach me at Facebook, Twitter, Instagram, all that stuff, either at Moving Iron LLC or at Moving Iron Podcast. You can find me there. Right. I can help you however you need to. Greg, appreciate you being on the podcast this week, man.
You bet. Catch you later, Casey.
See you next week. Thanks for watching this, and stay tuned for more Moving Iron Podcast after these.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking. Man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. Sparks with Sean Hackett. I've got Sean here from Hackett Financial out of Boca Raton, Florida. Sean, how you doing this morning?
Good, Casey. Super good.
Good to have you back, man. Well, you know, we've watched this move up on corn. Basically, end of last week, we saw a big jump up. Well, I guess it's 2 weeks ago. On a Friday, corn jumped up, and it came out. A lot of that was off of agronomics information that we saw come out. Basically, kind of supporting what the Pro Farmer Tour had talked a little bit about. USDA is going to have a reaction to that here in September on Friday as that comes around. I guess, Sean, as you watch this table get set, what do you see happening? What are your thought processes as you look into Friday?
Well, let's try to think about how the USDA normally operates. While it's obviously clear that they once again completely overestimated the August report in a year of warm nights, and it's just a habit of theirs. And you know, there's been numerous examples where they been off anywhere from 10 to 12 bushel to the acre in some years. That's too high, which is hard to believe that it could be so wrong. But when you're doing simply looking at statistics and not looking at agronomy, especially in a warm night scenario where the crop looks great, which is what they go off of in August, you can get this big mismatch, which is why we have been anticipating a harvest low in August and why we expected the market to start turning up as we got into September. We're seeing that. September, they really don't factor in too much agronomy yet, a little bit maybe. So maybe they can make some minor adjustments. The bigger month that they start really kind of coming a little more clean is in the October report. The next one after this is when they really can start making, doesn't mean they get all the way down to the truth, but they start really making the move towards where they're heading. And everyone knows if they drop their pants in October, they're going to, the yields are going to continue to fall into January. So, you know, small crops keep getting smaller. And so as harvest gets further along, we get into the I states, we get into further to where the core grain belt, we see more and more evidence of what is actually going on. The market will start to go up well in advance of that. So I'm pretty comfortable and confident that the market has made the lows for corn and soybeans. It's going to be a little bit of a grind in the early stages, like we've seen, you know, 2 steps forward, 1 step back, 2 steps forward, 1 step back. Doesn't feel great, but you look at a chart or well off the lows. But it should start to accelerate. It should start to be 3 steps forward, 1 step back as we get further into this. And so we have to adjust the market. I mean, we have to adjust the market to closer to trend line yield for corn and wheat from where the USDA is at. And if you adjust the ending stocks, we're under $1.5 billion in corn, billion bushel carry out, and we're in the low 200s for soybeans. One can argue exactly what all that means in terms of price. Every year's a little different. There's always variables, but it's certainly an upper $4 market at minimum. I mean, my view is it's a minimum up, you know, upper $4 market's the appropriate price, maybe a little higher. And it's a middle upper $11 soybean market at minimum. I think that's where we need to go. That's where I think we're going to, you know, at least go to. If I'm correct, you know, market's going to probably overshoot like they typically do. Specs get caught, they're short, there's emotions, you know, that's the way the market operates. But the bottom line is that if you look at what happened last year, this is almost a carbon copy. It's almost a carbon copy of overestimating, bringing it down. The market's had, the only difference is soybeans are going to be much tighter this year than they were last year. Where corn had the big rally, soybeans had a credible rally, but this year soybeans can have a much larger rally because we didn't play enough acres, and things are tight. And being off, you know, by a bushel to the acre, which I think we are, like last year, you know, it would mean a much tighter market, and we have renewable diesel standards going up next year. So the soy market should have a much more commensurate move with what I expect to see in corn, whereas last year was more of a corn story. It's going to be a corn soybean story. Then so I'm very confident that that's going to drive our markets to a more appropriate price. And the trillion-dollar question is, does Brazil ever stop planting more acres of soybeans and corn? I mean, in the last 8 years, they've increased their soybean acreage by 42%. Just think of that. They've increased their planted acres by 42% in 8 years. Pretty hard to have a bad crop if you're adding 42% more soybean acres. I mean, you could have a lot of bad weather in there and you just mask it over because you're planting more acres. I mean, and that's essentially the problem here, right? It used to be that Argentina and Brazil were pretty equal in their production. So if Argentina got into trouble, the market could really rally. But now, Brazil's producing about 160 to 180 million metric tons of soy. Argentina's 50.
Yeah.
I'm not saying Argentina does not matter, but it doesn't matter that much anymore.
Yeah.
So just think of it this way. You could have a terrible crop in Argentina, down 20%, which is bad. And you're off 10 million, metric tons.
Yep.
Doesn't
really affect much.
That's a rounding error.
Right.
For Brazil. So that's the problem, is that we've kind of taken Argentina off the table as a market mover because it's just so small relative to Brazil. And so the issue becomes this. So in years where you have more of a La Nina-ish type pattern, like I think we're going to have this year, southern Brazil and Argentina have bad weather, typically, and those crops are off. Typically, central north has better weather. Well, southern Brazil and Argentina, that whole region, if you include southern Brazil and Argentina, account for 50% of soybean and corn production. The north accounts for the other 50%. So 50% of the crop is good and 50% of the crop is off. You're not moving the dial down. And if they're adding acres in Brazil, then you're actually still moving the dial up. So that in there lies the quintessential issue: is will Brazil finally stop planting more acres because of economics? Which their economics have been horrible. I saw that the Brazilian government handed almost $3 billion to try to save some of the farmers who are all going belly up because they can't make any money. I mean, you would think in a year like this, after burning through all their equity in the last 2 years, that they would at least plant the same number of acres. I mean, in the least, like, not add acres this year.
Right.
So my hope is if we have flat acreage growth in Brazil, and then we have poor weather in 50% of the crop, we can actually maybe get ourselves to where the overall production is flat to down versus up every year, like it has been year after year after year after year. And not that that's like the most bullish story you ever want to hear, but it's a less bearish story than what we've seen every year, where they add those acres and production just keeps ratcheting up, and we continue to be capped by by that ability for them to do that. So I think that's really important to watch the estimates on planted acres from those that count it down there. I mean, I don't have any insight into that other than there's people down there who do a good job on figuring out how much they're going to plant. And so I'd be very interested to see if we see some of the private firms down there that do a pretty good job start to talk about maybe acres being flat or maybe even down a little bit, especially if weather's off a little bit. So that, to me, is the key metric to watch. What's interesting is that even though last year was the driest growing season in Brazil's history, it was the second driest first half of the growing season. It was the number one driest second half of the growing season. Coffee production was crushed. Orange production was crushed. Sugar production was crushed. Cotton production was crushed. Soybeans and corn production were fine because they got just-in-time rains exactly when they needed, and they keep dodging bullets with this just-in-time. It's almost like the U.S., right? We keep getting dry August, dry September, dry May, dry June, but then July just seems to always be fine, and we pull out a crop that's the least respectable. Um, so to me, they've dodged every other crop that they grow there has had major issues, but corn and soybeans, because they've just had an angel on their side. I don't know if they're going to continue to dodge those bullets, but sooner or later, if the deforestation of the Amazon continues to support a drier central northern Brazil than historical precedent would say, one of these years they're going to catch a year where they're not going to get those rains exactly when they need it. And it hasn't happened yet. And I don't know what year it will happen. We just have to watch it very closely. November 15th onward is the key time. We have to look for if rains are going to be timely or not. Up until that point, the weather, for the most part, it's kind of like, how important is the weather from April 15th to June 15th? It's a little important, but not really that important. From June 15th onward is really important. So I wouldn't get too excited about weather until we get to around mid-November, and then we just need to sharpen the pencils to see, are they finally going to catch bad timing on weather, and are they going to catch hot weather? They just haven't been able to do it, and so the risks are, as dry as it is, one of these years they may catch the wrong weather pattern and catch everyone off guard, and actually have a poor crop when no one's expecting it. I mean, that's how markets make big moves, is when something happens that no one is anticipating. I have been warning about this for years, Casey, and the precipitation patterns have verified my warning. We just haven't had the right setup timing wise, and we're just gonna have to keep looking for it. I think it's coming, and maybe this is the year. So,
Okay. All right, let's talk a little bit about some frost stuff that you put out a warning about here. Now, you've been talking about an early frost season for about the past 6 months, talking about what that would look like, early frost here in 2025, and then prolonged planting situations due to late frost in the spring coming up here in 26. So we're starting to see that. We had some frost in my neck of the woods over the last week. Last week was abnormally cool for the time of the year. It was awesome weather, but it was abnormally cool for where we were at. We saw some lows in the 32 range, 32 range. And as you went north into North South Dakota and up into Canada, you saw some 28, 27, 26 degree stuff that was, prolonged over the night. So I guess, Sean, as you're looking at this situation develop, as you're watching these cold snaps that we see coming through, what are your thoughts there, and then what's your forecast look like?
This past week, in many, many regions, I'm not saying every region, but many, many regions, it was the coldest week in 38 years. I think it's 1987. It's a long time. So yeah, this is really unusually cold, even in areas that normally get colder. Always hard to know for sure exactly to the degree that frost damages crops until you actually harvest it. But obviously, it's not good. Well, whatever the yields were, they're going to be a little less. The quality is going to be a little less. I mean, there's nothing good about having a frost this early in September like this. We think we'll have another wave at the end of the month in early October that will reinforce an additional period, because crops maturity-wise are way behind than normal, because we had kind of a coolish, the growing degree days were really low, historically low this year. And so, and remember, that's where your biggest year-over-year increases in yields are supposed to come from, the Dakotas. They just had really good rains in the areas that typically don't get rains and such. And doesn't mean these frosts are going to make them have a terrible crop from a good crop. It just means it could take the top off of what was potentially there. And if you take the top off the areas that were really giving you the biggest year-over-year increases, and you're trying to make 189,
right?
Yeah. It ain't going to happen. We already know it's a fact that the Central Eastern Grain Belt is going to be down from last year yields across the board. Illinois, Indiana, Ohio, Louisiana. I mean, they're going to be down year over year in yields. I mean, not dramatically so, but just a little bit. Well, then how are we getting 189? We had August in many places in the Eastern Grain Belt, not everywhere, but in many places, was the driest in 50 years. Not the hottest, but the driest in 50 years. So whatever the yields were going to be in corn and soybeans, they're going to be a little bit off even more. than what the Pro Farmer Crop Tour was talking about. So when you put all these things together, Casey, and then the warm night scenario that we're starting to see more and more show up with disease, with insect infestations, test weight issues. We've been pretty vocal that we look back at every similar year of warm nights, dry finish, areas of excessive wet. In some areas of central Iowa, for example, they had some of those places were as wet as they were in 1992, which is the wettest year that Iowa had in 50 years that year, in the center part. So, that center Iowa, the black dirt of the world, the best ground in the world, you never have a bad crop in the world. Are going to have some issues, and they're going to take a little bit off the top. I mean, everything says that we should be trend line or slightly below trend line, and we've been talking about this on your show for months, that was the expectation that we should be looking forward to. And I think ultimately, that's where we're going to wind up. And good grief, if you take 7 bushel to the acre off the top, Casey, you can run what that means for the numbers. But talk about taking 600 million bushels off the top of 2.1 billion, assuming they don't mess with demand, which they need to raise it because exports continue to blow past all USDA expectations. You're at 1.5 billion bushels or less. Exactly what we were saying last year is going to happen this year. And last year we were saying 2.1 billion in August, and then we came down ultimately 1.35 when it was all said and done. So it's to me, it's a very, very clear situation, and it's just a question of how fast the market is willing to recognize it. Because remember, we've had a serious bear market here psychologically. I mean, the negativity in August, was very, very severe. It's hard to turn that around. People are convinced, and no one ever wants to admit that they were wrong about a particular strong conviction that they had. But so it can take a little while to break the shackles of the bear. But once you do, then the acceleration can happen. And obviously, corn got down to not 393 and change, and now we're above 420. So quietly, we're almost 25 to 30 cents off the lows, and it doesn't really feel good yet. But yet, that's what we've done. So, and if you turn your head, I think we could be up 50 cents off the lows, and then you can turn your head again. I think we could be up 80 cents off. I mean, I just think it's going to be kind of a market that people aren't going to realize how much it's moved, and then by the time they realize that they haven't bought their physical corn that they needed as a livestock producer, as an ethanol producer, or farmers that wanted to buy back their corn that they sold in August like they shouldn't have, but they did. They're gonna miss an opportunity because they just keep listening to all the negativity that's out there, that there's no hope, no future, and we're going to be oversupplied forever. And just don't see that. So
Yep. Okay. Let's jump down and talk a little bit about what's happening in the cotton marketplace. So you're starting to see cotton harvest be rolling here before too long and underway somewhere in the deep south. But if you're looking at the cotton market right now, that's been a struggle all year long. Sean, as you're looking at it, what do you see happening there?
I think I call the ICE exchange. I told them they should shut the market down because it's not moving. It's not doing anything. They hung up the phone on me. Right? Yeah. I asked them, I said, why don't you shut it down and, open it up when the market wants to trade again? They didn't really like that idea. So I probably won't get into them again. But I have to tell you, I've watched markets for a long, 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 long time. I don't remember too many markets that have been this quiet for this long, this boring, without some volatility. We've seen so little volatility. We've had a very, very weak hurricane season, which we predicted on your show, by the way. So we've had nothing to worry about for hurricanes that we typically do. The weather overall has been more of a cooler, wetter Texas. And even though that's not necessarily doesn't historically produce the best crops, it's hard to get the market excited over cool wet weather. They like hot wet weather. I mean, hot dry weather. And so, and you keep hearing about, recession and consumers and debt, and no one's getting hired, and the demographics of China are falling into the abyss. This is what everyone's spewing out there. And of course, we know that cotton is a economically sensitive, one of the few economically sensitive ag markets in terms of you tends to follow the economic activity of consumers. It's been tough to find demand showing up the way that we would really need to see in order to get the market to show some moves without any weather counts, which we really haven't had. So that's where we're at. I mean, when you look at the Chinese, they're stimulating like crazy. Their stock market's taking off. Their economy is starting to actually improve. All of Asia is starting to do better. Most of the cotton demand doesn't come from the United States. The cotton demand growth comes from Asia. So I'm pretty optimistic we're going to see some better demand out of Asia as we move in to the end of the year. But just the tariffs have it's just, I think, delayed when we would see some better demand coming for U.S. cotton. I think we'd have seen it already with the weaker dollar and everything. I think we'd have seen it, but the tariffs are just preventing those purchases from being made. I did see that Pakistan, a big producer and consumer of cotton, had one of the worst floods in 50 years. I think it's all coming, and it would be super, super nice to start getting some clarity on the tariff front. We talked about October. Treasury Bessent continues to suggest that they're going to meet for kind of they hope to be a final round to kind of iron out a trade deal 2 from the trade deal 1 they had the last time Trump was president. If we can get anything where there's some clarity that kind of eases things back a little bit, and we can get some normalcy of trading activity, then we can see some better demand coming for U.S. cotton. Obviously, we have the Trump administration appealing to the Supreme Court to decide whether his tariff policy is illegal or not. The circuit court said it is illegal, but the circuit court said we're going to let the Supreme Court decide, and they asked, I think it was this Wednesday, they're going to ask for an emergency meeting for the Supreme Court to decide are his tariffs illegal. If some portion of them are illegal, then he would have to immediately remove a good portion of them. Probably not all of them. I think if they were to vote against them, it would be a partial. But nonetheless, if they would have to remove tariffs from that would be hugely positive for better demand for U.S. because immediately U.S. prices would be cheaper because whatever those reciprocal tariffs that we added on would have to be taken off, is my best guess, if they vote against, Supreme Court votes against those. And that immediately makes our products immediately cheaper overnight. And people are going to rush in and buy U.S. supplies while that's the case. I don't know what the Supreme Court's going to do. I don't know how quickly they're going to decide. I would think they're going to want to decide this pretty quickly. It's become a catalyst that we didn't have a month ago that I think now is on the table between here and the end of the year. So that could be another catalyst to watch very, very closely if they force Trump to take some of these tariffs off. So I really think in the meantime, I think I should keep the market closed.
Okay. All right, Sean, good stuff as usual. Folks want to reach out to you, get more information on what you're doing over at Hackett Financial. What's the easiest way to do that?
Our website is Hackett, HACKETT advisors.com. We also have a Twitter page at Faradix11, LinkedIn page, where from time to time we put some different things out about what we think about different markets, some weather outlooks, that sort of thing. Keep people in tabs of what we're thinking and why we're thinking, so that what we do might be of value to those listening and watching your fantastic show.
Well, I appreciate that. Sean and I are going to do a quick kind of recap of the September WASDE report on Friday. That'll be at 1:20 Central Time after the markets close. So if you're interested in that, we're going to do it on Twitter Spaces. So just tune into my Twitter page. You'll be able to see that there. And I'll also hit up Sean's Twitter page as well, so you can follow it from there as well. But if you're interested in checking that out, I think it's worthwhile just because of where we're at right now, and you never know what USDA is going to do. Sometimes they're not surprising, sometimes they are. So be interested to see how those fireworks play out. But if you're interested in that, again, 1:20, let's make it 1:30 Central Time. Sean and I will be on Spaces talking about what's going on. So check that out there. So Sean, appreciate you being the podcast.
Thanks, Casey. See you next week.
Talk to you on Friday.
Yep, talk to you on Friday.
Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast. Aaron Fiddle back on to talk about SAP in the marketplace. Aaron, how you doing?
Pretty good, my man, and yourself?
Not too bad at all. It is, well, here we are, mid-September almost. For today is record this the 9th, so we're really close to the middle of September. You start seeing a lot of things perk up as we watch this time of the year, as end of the year buying starts to come into play and what people are doing. And there's several factors that are going to play into this year. We're starting to see the price of corn move, so it's getting some people excited. Right now, I think if you look at basis where things are falling in at, you're about 370 to 375 right now. Cash corn, still a long ways to go before it's any kind of
Not too bad.
a big home run by any means, but looks like as you watch the marketplace
at this point.
yeah, it's still moving, making its way up and doing what it needs to do. But
We're just looking for a bunt right now.
yeah, exactly. That's exactly right. But if you have, if you're in the market to buy something right now, I can't think of a better time if you want to come buy something because of where pricing is at and programs that are out there and interest rates, those kind of things that are out there. So as you're preparing to enter into a buying mode, if you're in that situation for the end of the year,
Not too bad.
there's some things I always like to talk a little bit about as we go through that. And I think one of them is truly understanding what your needs are, right? What does that look like? And truly understanding where
Not too bad.
what that situation looks like if you trade the particular piece of equipment you have right now into another piece. What's that interest rate look like, and what's your difference, and those kind of things, and truly understanding what the marketplace is. So, one thing I've always
Not too bad.
encouraged guys to do when they're looking at a piece of equipment is and start going down that path of what's my used piece worth, or what's my what's a fair deal look like on the piece I'm buying. There's no lack of places out there to go look at what machines are how you find a value of a piece of equipment. There's auction value. There's value out there on the various listing sites that show what things are being listed for and all those kind of things. So
Not
a lot
too
of
bad.
different paths to go down. I think for me, I think the one key
Not too
piece
bad.
of information that I always want to make sure I understand is I didn't really pay attention to this for my first half of my career because interest rates were basically zero. But when you look at them now, when you're trading something in that's got a lower interest rate to something maybe have a higher interest rate, what does that look like? How does that affect what your overall equity position is going to look like? And then what's that look like on the backside? How much down payment money do I need to put down to kind of keep my ratios in line as far as depreciation, those kind of things roll through, and then keeping a strong
Not too
equity
bad.
position in my piece of equipment. Now, that's a whole other conversation too. What is your strategy with equity, right? A lot of guys are that I've worked with in the past don't want to have any equity in the machines that they're running. They want to run them as cheap as possible. And if you're trying to run something as cheap as possible, you're not building equity. And if you're trying to build equity, you can't run them as cheap as possible. So those are the two dichotomies that you have to pay attention to.
Not too bad.
Depending on your strategy, what that looks like. But if you're trying to weigh that out, hey, I'm a high equity guy. I want to make sure I keep some of that equity, as much equity as I can in the piece of equipment as I roll it through. Pay attention to that interest rate, because if you're going from a 2.75% interest rate on what you've got now and you're trading it in and you're rolling that over into a 6.5% interest rate, the amount of money that additional 4% interest every year eats up rapidly deteriorates your equity. So understanding what that looks like. So I think, to me, as I'm looking at this right now in the situation that we're in, I'm paying close attention to what's my equity position, what's the interest rate that I'm rolling into, and how fast is that. Just run some scenarios. How fast is that equity position of my machine going to be ate up by
Not
the
too bad.
additional above beyond what I normally have now as far as my interest rate goes to where it's going to go? What's that do to my equity position? What are some of the things you pay attention to, Aaron, when you're looking at markets right now?
Well, I was just going to say, when I am buying a piece myself,
Not too
It
bad.
is, I look at one thing and one thing only, and it's the main thing, which this all ties back to equity. I rarely ever,
Not too bad. Not too
interest
bad.
is what it is.
Right.
Okay. In the grand scheme of things, if you need this tractor, 4 or 6%, whatever,
Not too bad. Not too
it
bad.
is what it is. Go get the tractor.
Not too bad.
What I look at is what
Not too bad.
dollars today I need to punch out in 6 months. Where am I at there?
Right.
That is the number one thing I look at.
Not too bad. Not too bad. Not too
all
bad.
this, the programs and this and that and everything else. What's the price right now? What am I writing a check for? Even if you're financing, whatever. What am I writing a check for? I got to throw this on Marketplace in 6 months, can I?
Not too bad.
Right.
That's the number one thing I look at, because that is the number one thing that affects the bottom line of the operation.
Sure.
Dollars held up in a piece of machinery that
Not too
has to
bad.
go earn its keep, not just keep eating and go to market.
Not too
Okay.
bad.
So, from that standpoint, I always,
Not too bad.
also from that standpoint, quite oftentimes, that is I sell my own trade scenario. Okay. That is becoming extremely prevalent. I can't tell you the last time I got a 10-year-old trade in it.
Not too
Oh, no.
bad.
Yeah.
Not too bad. Not too
Yeah.
bad.
Big Iron, Auction Time, Marketplace, Craigslist. Like Craigslist is like an old, that's don't even exist no more.
Right.
Like it's just gone. You open Marketplace and it's like Tractor House,
Not too
Yeah.
bad.
or excuse me, Machinery Pete. It's like pulling up Machinery Pete and there's all these listings.
Yeah.
And that's what it is.
And it's amazing what you see in there. It's not just
There's
44.
8R after 8R and Magnums and
Yeah.
Lexion Combines and like what on earth?
Yeah.
10 years ago,
Not too
be
bad.
like, whoa, why is that guy got a 7720 on Marketplace? I'd never sell that on there.
Yeah.
It's just, that's our world, man.
Yeah.
For instance, there can be some nitwit that goes and does videos of machinery and sells machinery. So, I mean,
That's what that does that.
there is capital nitwit on that.
Yeah.
But-
You bring up a good point with the marketplace thing.
Yeah.
That's if you're really thinking about what that looks like,
Not too
there's a
bad.
threshold there when you start looking at what that looks like, because
Not too bad.
typically the piece that you're trading is holding all the down payment money that you need to have to go back to trade your machine, typically.
Right.
You know what I mean? So that's the whole thing, like the washing out of the machine that you're trading in, and are you generating, how are you going to generate that capital when you go out and buy something from someone that's not a dealership, right? And what's that look like? You're going to sell your own on there, start running into, the whole trade scenario. Because I try to find my daughter a car, so that's where I look at all the time is marketplace for that
Not too
$3,000
bad.
to $5,000 car thing,
Yeah.
and
Just
there's
bought one last week.
the thing about that, it says the description in like big bold letters at the bottom, no
Not too bad.
trades, will not entertain trades,
Right.
and that's the same scenario on the tractor side. You see that I'm not considering trade. So that's a whole kind of ball that you got to keep rolling. But there's a million different ways to do that, and quite frankly,
Not too
when
bad.
you're looking at the value of equipment and how things are moving, what is on
Not too bad. Not
when
too
you're looking
bad.
at like the big irons and the purple waves and the merits and those kind of things that have how much online auctions are prevalent now, and they're everywhere.
Right.
You're seeing the easy button is to go out, and especially on a 10-year-old tractor or something like that, you're going to get as much, if not more, at auction as you would if you traded it at the dealership.
And you literally have to do nothing.
Not
You
too
can
bad.
sit in your chair in the house,
Not
call
too
a
bad.
number. That guy will come out to your shed,
Yep.
back it out, take all the pictures, do everything, and you can wave from the house.
Mm-hmm.
That's it. That's all you did. But when I'm back to that point, Casey, when
Not too
I
bad.
am working a deal and
Not too
talking
bad.
with a guy and trying to guide him, I want to sell a piece of machinery. Obviously, that's what I get paid for.
Not too
but
bad.
I always advise guys on the best path. Okay.
Right.
Not
When
too
you
bad.
have that, you know, guys call me all the time. Hey, I saw that video on that wholesale thing. Will you take a trade? Absolutely. And I love trades. I love trades. I wish people would trade on everything.
Not too bad. Not
I
too bad.
can't compete
Not too bad. Not too
with
bad.
what I can give him for a trade allowance.
Mhm.
Not too
I'm
bad.
going to get the same out of it that the auction house is in that 10 to 20-year-old. I might get a tick more,
Not too
but
bad.
by and large, that market is that market, and it doesn't matter what avenue you go, you're going to get to that same number within 5-10 grand, right?
Oh yeah.
Doesn't matter if it's private party, auction, dealer, whatever. When you get into that realm, that's where that market's at.
Yep.
So,
Not
you
too
know,
bad.
I'll be talking with a guy on an 8R, and he's like, "Well, I got like a
Not too bad.
8R or a 8360R with 3,500 hours on it." You're like, "Ooh, I would love to trade that." And here's what I will give you, and that's me really sticking my neck out. But here's probably what you can get yourself
Not
in
too bad.
15 minutes.
Yeah.
Not too bad.
Oh yeah, good point. Okay, goes and does it, buys a tractor. I mean, that's how it works.
Yep.
Not too bad.
Yep.
I understand when you get into,
Not too bad.
and it's different. It's different pockets
Not too bad.
depending on your operation. Not even your operation, but depending on your fleet, so to speak. Okay, if you are a
Not too bad.
1 to 5 year old iron guy, I get trading, and you should trade. Otherwise, you've become a dealer. You have $1 million in inventory you're trying to sell yourself.
Yeah.
You know, you got to keep that clicking.
Mhm.
The 5 to 10, very item specific.
Not too
Okay.
bad.
It really
If
is.
you-
Yep.
If you have the right row crop tractor or the right loader tractor,
Not too bad.
by all means, capitalize it.
Not too
If
bad.
it's a combine in the 5 to 10, probably punt. Okay.
Right.
Not too bad.
Now, when you get in the 10 to 20,
Not too bad. Not too
almost everything there, if the guy is willing to handle it himself, he's always going to be dollars ahead. Always.
Yeah.
And I would love the trade. I'll show you the numbers every damn time, but
bad. Not too bad. Not too bad. Not too
for
bad.
maximizing the dollars
Not too bad.
for my customer, that's typically the best way to do it.
Not
Yeah.
too bad. Not too bad.
Yeah,
Not too
you're
bad.
exactly right. There's a big difference between trying to go out and sell something on Facebook Marketplace that's a $550,000 something, right?
Right.
You're gonna struggle with that one, right? But if you're in that, I would say 250 and less range, you're gonna find buyers for that stuff, especially if you're under $100,000. You're
Oh
absolutely.
yeah. Under 100 all day, every day.
I mean, you're gonna just be. You're definitely do that. But I think that if I look at that, I kind of look at that like 250 is probably kind of the max, plus or minus a little bit, But
That's because in the marketplace, 250 has become the level that 100 used to be.
oh, I know. Yeah, I know. Yeah, it's
Like 5 years ago.
I know, right? That's there. But I think that's the thing about when you go in and make a transaction, right?
Not too bad.
When I was a used equipment guy, I always tried to look at it like a CarMax model, right? Like you're
Right.
buying a piece, you're selling a piece.
Yep.
Neither of those pieces have anything to do with each other because they're two completely different transactions. And I think that's how you have to look at it when you're the guy that's making the trade in, right? I mean, you can sit there and try to mine's worth more, and there's just so much data out there that it's hard to show. It's not easy. I'm sorry, it's not a difficult thing to show you where that's going to land at in the marketplace.
No, and there's so much data out there, and how you look at it, analyze it, can justify 4 different
Oh, sure.
directions.
Yep.
I can justify my 50,000 allowance just as fast as I can justify for you that it'll bring 80 every day.
Right.
But
Not too
I
bad.
have all this middle that you don't because it's in your shed.
Not too
Exactly.
bad.
Yep. And I think that's the thing. So I guess my takeaway from this would be, if you're looking at something, going in and buying something today, spend some serious time looking at what
Not too bad.
where auction value is and then where retail price is. I love the conversation when someone called in and would say, you know, hey, they're bringing X on Tractor House or Machinery Pete, right? And like, no, that's what they're listed for. That's not what they're bringing.
Right.
What they're bringing is what auction value is. That's what they're bringing, right?
Right.
There's a level above that the dealer's getting based around what the dealer can offer you, right? And that's the thing you can have. So take that hard look in there and really dive into that situation, that understanding where the market's at and being going your eyes wide open when you're going and make that trade, because that's the kind of stuff that will
Not too bad.
ultimately put you in a position to be successful. Just like you're saying, I look at the interest rate and I'm trying to figure out how's that payment going to adjust that payment and what's that look like and all those kind of things that are going to go into play. But ultimately, at the end of the day, is you're trying to stay ahead of the depreciation curve and not eating into whatever equity you have. And just like you said, you've got to go in there every day or go in there and take a look at, if I bought this today and I had to sell it in a year or 6 months or something like that, where am I going to be at? And I think that's the conversation you can have, and we put a couple $100 or something like that on it, on a tractor in a year or 6 months or whatever it is that you do. You can start playing those scenarios and roll those out.
Not too bad.
Spend some time looking at that. Spend some time working with a person that can help you figure those things out, and you're gonna see the path that you need to take. That's going to give you a good solid path moving forward as to what that will look like. So I think
not too bad
when you are
not too bad
looking at, hey, I got these things I need to go out and purchase. Those are the scenarios you need to take a look at, especially when you're looking at planning for the year, what that might look like and those kind of things. Because I can tell you right now, just looking at where the market's at, we're at the bottom of the market. I don't think we're going to go any lower, and we're going to start working our way out of this as commodity prices start to come up. We're starting to see things move. By no means is it gangbusters. We're going to, someone's going to buy an island from the commodity prices that are out there by any means. But as these things start to creep up, you're going to start seeing auction values. We've already seen auction values creep up from what they were a year ago. And we're starting to see the retail values come back in check with where the auction marketplace is, and that ratio, about that 120% of auction value that I talk about all the time. We're starting to see that come into play.
Not too bad.
Come in there and work things out. So as that ratio starts coming up, we're going to see more and more. As the price of commodities start coming up, we're going to see more and more price fluctuation. So if you're in a position to buy something and you want to do that, I think this last quarter of the year, starting now through the end of the year, it is going to be your best chance to buy something where you have a quote unquote bargain that you still can go out and get
from Aaron.
Exactly. Exactly. Yeah, for sure.
And here's another thing. When you're calling a dealer, hopefully it's me, but when you're calling a dealer trading whatever.
Not too bad. Not too bad. Not too bad. Not too bad. Not too bad.
And you want to maximize. It never fails. The guy who sends you 4 pictures wants the most for his trade.
Not too bad.
Right.
Okay.
Not too bad.
I don't mean to ever sound rude or anything about this, but for the farmer or whoever's purchasing the machinery, do your part.
Not too bad. Not too bad.
Exactly.
There's no such thing as too many pictures.
Not too bad.
There is, and in fact, every time I take pictures of a combine, I end up with 75 pictures, legitimately 75 pictures that matter.
Not too
bad. The internet apparatus only holds 50.
Not too bad. Not too bad.
So what do you do with your hands, right?
Right.
So there's no end to pictures or whatever. And pictures go further than film because I can zoom in, I can look, I need to see that. Videos are great. Yes, it runs. Okay. Moving on.
Not too bad.
The other thing, and this is a big thing your cohort there talks about, Casey.
Not too bad. Not too bad.
Tell the story.
Right.
If something has been done to it, fill me in on the history. Fill your guy in. Let him know, okay, in 21 we did this, 22 we did this, 23 we did this. Okay. That goes a long way to knowing what the dealer is dealing with, to know what we have to put out there for the next guy, and our confidence level. Our confidence level is directly reflected by the numbers after that dollar sign.
Not too bad.
So your machine, you tell me the story, that goes a long way.
Not
all
too
the
bad.
data. If you got work orders, keep your work orders handy. I am a little pissant after hours pretend wannabe guy, and I have a file with each machine,
Not too bad. Not too bad.
has every work order,
Not
a
too bad.
parts ticket, whatever, and bam, look here.
Not too bad.
Yes, I think my 4020 is worth 1,000 more than his. Here's why. And then you just justified it should be 3, but it's only 1. Yours is a deal still.
Not
Yep.
too
You
bad.
know
That's
that.
the transparency part of it, man. You know what I mean? It's that
Yes.
if you've done a bunch of work to something and you've rebuilt the engine, rebuilt the transmission, you just put alternators on, starters, whatever, those kind of things. All that stuff is telling a story of, all right, that's one less thing I have to worry about when I buy this. Right.
Correct.
And that's the story you have to say. No, not saying that you're going to go out. If you go out and rebuild the engine, it costs you $25,000 to rebuild your engine and your whatever, your 4440 or whatever.
Not too
That
bad.
you're going to get $25,000 back, because you're not going to get $25,000.
No.
But you
No.
might get 10 or 15 of it back. Right.
Yeah, you're probably going to get. That's exactly right.
Yeah.
But
Not
in
too
no
bad.
world,
But you're not going to get that unless you tell somebody about it.
exactly, exactly. But to that point, nor should you put a new engine in there if
Right.
you're going to trade it next year.
Not
Right.
too bad.
Or if you did put the engine in it last year and something happens this year that you're like, we're just going to trade it. Don't.
Not too bad.
You're that deep. Go
Yeah.
a little deeper and keep it.
That's a good point. That's a good point, because you got to pay attention
Because
to
then you know what you got. I got a guy I'm kind of buddies with, is a big farmer. Does all late model stuff, rolled stuff.
Not too
And he
bad.
reaches out to me
Not too
a couple
bad.
months ago and he says, I really want a 4455 for mowing. And I'm like, okay, great. Now there's all kinds of avenues we can go with that. Do you want this banged out feedlot special, or do you want this $150,000 one with 4 hours on it?
Right.
Right.
Not too
Well,
bad.
something kind of in the middle.
Not too
So
bad.
my suggestion was this.
Not too
Go
bad.
get your banged out one, but make sure it's a 92 last year,
Not
3
too bad.
remotes, and it has all the stuff,
Not
and
too
use
bad.
it.
Not too bad. Not too
When
bad.
the engine fails,
Not
put
too
an
bad.
engine in it.
Not too
When the
bad.
tranny fails, put a tranny in it.
Not too bad.
You've got a new tractor at that point, repaint it, and that's going to outlive your 6M, 6R, 6 whatever.
Sure.
And you know what you have. Okay?
Not too bad.
There's 100 ways that, I just delivered that to show there's 100 ways to look at how to go about something like that.
Yep.
And I know guys that have done that,
Not
Yeah.
too bad.
that have gone to a series, or actually gone backwards a series or two,
Not too bad.
and basically just rebuilt into new, kind of along the lines of what Ben was doing with the cats,
Not too bad. Not too
where they
bad.
bring in them like A and B series
Oh,
and just make them brand new.
Yep.
Doing that with like 8430,
Not
Sure.
too
a
bad.
Gen 1 8R.
Not too bad.
Yep. Yep.
I
And
mean,
I think
it's
that-
there.
the thing about the reconditioning too, it's a good point you bring that up when you're looking at that, is if you golden hammer that machine,
Not too bad. Not too bad.
you spend the 15 or 20 grand on something, a combine or whatever it is, chopper or whatever it is that you're doing something like that with. Some of that
Oh,
stuff,
so you changed oil in the chopper is all.
exactly. Some of that stuff you have to do anyway, right? If you don't do it, it's going to fail, type of stuff. I get some of that, but you start looking at some of those bigger reconditioning dollars. That's hard. That's one of those hard points to really bring back the
Not
money
too
you
bad.
spent back into the trade, right?
Typically, reconditioning dollars are already out in the field.
Exactly. Yep.
You've already spent that. You got to recoup it.
Right. Exactly. And I think that's the thing you have to pay close attention to when you're going through that trade cycle. So if before you start really looking at how you're going to recondition something post-season or something like that, and you're thinking about going down the path with that, I'd start having that conversation before the season even starts. What's it look like if I put 400 hours on this, and then whatever the number is that you're going to put on it.
Not too bad.
What's that look like, and how am I going to make that work? And then what's those reconditioning dollars associated with that? Is that juice worth the squeeze if I decide to trade it? Because there's some like my rule of thumb's always been on combines. If you look at a combine, that 500-hour mark is where you really start making some tough decisions about what it is that you're going to do with that combine moving forward. Because if you go past 500 hours, that reconditioning, you hit that first tranche of really high reconditioning costs.
700 hours.
That's when you start worrying about that. And that's about a season they use for some people, right? So when you get to 500 hours and you've maintained it and you've done the things you need to do, you're getting really close to having that decision. So if at 500 hours you say, hey, I'm going to go ahead and run this one more season.
Not too bad.
You get to that 700-hour mark and you do that reconditioning stuff, or you don't do the reconditioning stuff. You kind of need to make that decision as to what you're going to do before that 500-hour mark, because when you get to 700 hours, either you're going to pay for it or you're going to pay for it at the trade, right? And
I think personally, and I know, having known each other a couple decades, you agree. The most perfect time, the most perfect way to do a combine is,
not too bad,
unless you're a set
not too
parameters roll guy. If you are I buy this combine and trade when I feel like it person,
not too bad.
When you encounter the big shop bill, do it.
Not too bad.
Trade the next year. Yeah. That is perfect. Yeah. If you trade it before that bill is done, I know about that bill. And I have to account for it. And I'm probably going to I'm going to CYA a little extra over and above that bill.
Not too bad.
Because the techs in the shop will listen when you say stop, not when I say stop.
Right, exactly.
Okay? Yeah. So then you go harvest. You spent 25, 30 on that combine. You go harvest. In theory, here's the why behind that. You should have a completely trouble-free harvest, and everything should work as it should.
Not too bad.
You can trade that combine. It needs hardly anything for me.
Not too
We're
bad.
back to that confidence. I don't have to allow a bunch for reconditioning. I can wash and park it, knowing it's a good combine, knowing I got this great big shop bill, and it's probably the first one that's going to leave, and everybody wins.
Not too bad. Not too bad.
That goes back to what you just said about the parts are in the field type of thing.
Yes.
Not in the field, because if you use that, if you go and recondition after that big shop bill and you use that one season, when it comes back in, theoretically, you shouldn't have to have a whole lot of reconditioning costs. But it all comes back to if you're working with a dealership that you don't normally work with, you've got to show them that, hey,
Right.
I had this all done last year, right? Right. If the dealer that you're working with is the same dealer you always work with, then they should be able to pull that up, and hey, we've got, this is what we did last year, blah, 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 and to be able to see all that kind of stuff. That was one thing I always tried to look at as much as I could was, what's the work order history for this machine look like when we were going through the evaluation process? It makes a big difference in what, it doesn't necessarily change the retail value of the machine, but it sure changes the trade value of the machine. Right?
Yeah, that's exactly right. It's only worth what it's worth up here.
Right.
But down here, which is what matters to you,
yeah,
that's where all your fluctuation is. And if you've already handled that out, here's where we're at.
Right.
So again,
it's
really that simple.
Yeah. So it just goes back to, again, that transparency piece, making sure that you're on top of what's going on out there.
Not too bad.
More to that, what is the first question
Not too
I get
bad.
asked when they call on a combine?
What's been done to it? Yep.
What's been done to it? What's it like?
And it's been through the shop. That's my favorite response to that. So.
Yeah. Has it been through the shop? It was. We the other day we opened up both ends and drove them all through
the shop. Yeah.
They've all been through the shop, baby.
For sure. All right. It's probably a good place to stop.
That still costs $5,000 a machine.
Surprisingly, it does. Yeah. Surprisingly. All right. Good place to stop. Folks want to reach out to you, Aaron. What's the best way to do that?
Okay, you can catch High Plains Wholesale on TikTok and on Facebook. You can catch Aaron Fintel on Facebook, LinkedIn, and X. And you can call me or text me, 308-760-1193, or email me, afintel@21equip.com.
You can check me out, Facebook, X, Instagram, TikTok, LinkedIn.
Not
God knows where else.
Smoke Signal, Open Pigeon.
at Moving Iron LLC, or you can go to Moving Iron Podcast. You're going to find me there. You can listen to the audio version of this over on AgWeb under the podcast section. You can find that there, and you can also check out Farm Journal's YouTube channel to see the video version of this podcast as well. I want to thank Aaron Fennell, Greg Machinery Pete Peterson, and Sean Hackett for being on this week's podcast. So until next week, let's go smart, folks.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.